Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing great. We have the end of the week here upon us. This week kind of flew by after last week's really wonky kind of holiday affected week. It's nice to have a good open 5 days of trading. It's actually been far better a week in terms of the type of follow through and clarity in the markets that we really lacked last week. We do have a hot zone coming up this morning that's worth keeping an eye on. It's a stealthy one. It's not so much the University of Michigan consumer sentiment release that I'm particularly concerned about. The hot zone that we'll be looking at as we kick off the Friday session in the Sector Secrets Mastery Room for our day trades is going to be that University of Michigan inflation expectation. That's what I've been looking at a little bit more closely with this 10 a.m. Eastern hot zone. So heads up for that. We no sooner end the clearing range and then we go right into the hot zone of the inflation expectation, which of course lands in that macroeconomic metric of inflation, growth, and jobs. So keep an eye on that. Don't worry about July. We're getting the rate hike. So this has nothing to do with whether or not we're going to see a hike in July. It's up near 90%. It just really at this point, stick a fork in it. It's done. Where the conversation is now is September, November, and December. Are we going to hike one more time or are we going to pause? And right now, it's looking very much like a pause, right? Right now, it's looking very much like that. And the way it seems that inflation is being decoded, is being digested, is if inflation continues to tick down, the logic is then the Federal Reserve has done their job. Don't judge whether or not it's quote unquote true. It's perception, gang. So if it looks like inflation's ticking down based on the data, then we're going to look for lower probabilities of another rate hike after the July 26th meeting. All right, so that is what we've got going on right now, and that's what I'll be keeping an eye on. So let's go ahead and jump into the questions. Let's make sure we leave plenty of time for those. If you have a symbol, if you have a question, a setup, something that you're curious about, we'll take a look at it together. So let's get into it. Let's get these charts up. Get to work. All right. So first up from our training room, GDX. All right, GDX. So and this is from our training room and Mike is asking about that. So two things when it comes to GDX, Mike, I'm going to always take a look at GC first. So if I have a bullish outlook on gold futures themselves, then I can start looking at having a bullish outlook on the miners, right? GDX and UGT. I can even look at XME. And so, yes, I would like to get long gold. It's at least neutral, and it's not something that I think has been easy to trade as of late. But let's see what the GDX is giving us. And that is just now doing something, Mike, I think really important. And what I mean by that is take a look at the chart on the right. That's GDX. And it's done something that I think merits at least some interest. And that is it's broken the downtrend and it's broken above the 200. Now, we've done this before, right? We've done this before. We should get a little bit of follow through at this point. So if GC futures can continue higher, then I would like to start looking at oversold buys in the daily price movement range in GDX. But I got to be straight up with you, Mike. I haven't been putting a lot of emphasis on gold or bonds as of the last month or so. I think that as long as we're not certain about what the Federal Reserve wants to do, real interest rates or real yields are still up in the air. And that's really what gold tracks off of, an inverse or negative correlation to real yields. All right. Thanks for the question. All right. Next up, Dirty Dog mentions, thank you for saying it doesn't mean it's true. Oh, you mean the data? Yeah, so it's a funny thing, Dirty Dog. Yeah, I don't ever look at data. Look, I don't care if it's true or not, right? All I know is it's a measuring stick for what we know the Federal Reserve is going to use to justify. So here's the tricky part. There's a lot of traders that are going to spend a lot of energy railing against the fact that these numbers aren't true, rather than just simply trading what is. And that's where I always like to liken data to Morpheus has come up to you. You're in the matrix. He's handing you the red or the blue pill, right? Red pill, you leave the matrix. Blue pill, you stay in. Gang, we have to stay in the matrix. We are traders. We take the blue pill, jack us back in, because that is the reality. And I think that's where a lot of traders will, on one hand, yeah, they talked about a lot of metrics. Do I think it's true? But it really doesn't matter, does it? It only matters how the response is to the data. And I think that's always a slippery slope that you'll see on television, right? You'll see these analysts, right, with seldom any skin in the game, talk about what the markets are going to do. This is why I love retail traders. This is why I'm a fan. This is why I am a retail trader. It's my money. I've got skin in the game. It's my pain. It's my risk. It's my reward, right? And that's why I like, sticking with what is a actionable tactical idea, and not, having cocktail hour type discussions about where the markets are going to go without any skin in the game, right? So I hear you, dirty dog. Okay, so let's get to our next question. And that is plug. All right, got a question from our YouTube. Hey there, Lynn. So plug. All right. What's the structure of plug? It's trying to go into an uptrend. It's still below the 200, Lynn, so be careful. The uptrend is going to be important. It is above the first trading day of the year, anchored VWAP. So two really important levels on any chart. Where's the volume weighted average price that is anchored, not rolling, but anchored? And we are above that. That's bullish. That's a bullish step. And the second one is, can we get above, say, 1330? The other thing that I will mention, Lynn, because it is a sub $20 stock, is more so than price, right? Volume. More so than price, volume. So if I squeeze in this year and I ask myself, where's the point of control? It's down at 904, right? So that's where, when we ask, where are the banks, where are the hedge funds, where's the size, where's the interest? It's at 904, right? So anything north of that is where those folks are likely making money. After 904 will be that 1330 area. And then I would say another volume ledge, which is very close to my automated Darvis level, would be around 1160 in terms of where I would be open to getting long. And yes, it is something I'd look at from a bullish standpoint. All right, editor asks me, take a look at Square. Hey, bot put us in Square the other day, right? So if you're in the Sector Secrets Mastery, the bot sent out an alert for Square, and we're looking to the long side, and we're looking to continue to take advantage of movement higher on SQ. Let me move the time over. So there we go. We're looking for movement higher on SQ. I'm a big fan of continuing to take advantage of that move. And what would I do with it today? Not a darn thing. Editor, it's trading up near highs. Remember, gang, 90% of traders see a higher high. They see a big candle and they go, ooh, shiny, right? Well, what's the last thing a fish sees before it hits the frying pan? Ooh, shiny, zip, be careful, right? It's a sharp move higher, which is great. Maybe there's a day trade there to be had. But big up candles, I'm always thinking, what was upstream to that big up candle? What came before it? I think the 200 break was probably a pretty big moment through, say, 71.80. But as it makes higher highs, let it. I won't be engaging a market punching up to higher highs. Remember, gang, retail trader land, right? And I don't consider anyone listening to this show your average retail trader. You're putting in the effort to learn. You're putting in the effort to direct your own order flow and manage your own money and so forth. And those are all the things that most retail traders don't do, right? They just want to hear what someone is talking about on television and blindly follow it. And then they wonder why they don't make money. And then they say, oh, the market is rigged. I'll be honest, gang, maybe they should do their own homework like you all take the time to do, right? So I'll step off the soapbox, but think about what your average retail trader does. They buy at higher highs and they sell at the lows. And then they wonder why they can't make money as traders. And then they want to blame algos and they want to blame high frequency and they want to blame hedge funds or whatever, when I realized a long time ago, our biggest enemy is that person in the mirror. So please don't engage things at higher highs unless you're getting an initial breakout. Okay, Rob, what does that mean? The initial breakout would be either the 11th or the 12th on this chart, not today, right? I'd say the 11th or the 12th, right? So that's what I want to keep in mind. It definitely was not the action on the 13th, and it won't be the action that we're seeing today on the 14th up near the highs. Maybe a day trade, though. All right, next up is, are there any special opportunities presented by the rebalancing? Jack, I think generally we're going to see a lot of volatility. We get that information about which stocks are going to have more percentage weighting in the NASDAQ 100 as those big 7 companies, the Magnificent Seven, really 9 stocks: Apple, Microsoft, Meta, both the Googles, Amazon, Tesla. I throw NVIDIA in there. So you got roughly 9 stocks we're looking at. And where does that 55% weighting, as it's reduced to about 40, where does that extra 15% land in the rest of NASDAQ land? That's where I think it's just going to be a matter of volatility. And Jack, find the relative outperformers, right? Find those stocks that are in uptrends this morning. NASDAQ itself is not in an uptrend this morning. Dow is. If you take a look at the 5-minute, let me show you a little bit of what we do in the morning, right? So the bell's going to ring in about 18 minutes. So we sit down in my mastery, right? And we're going to say, all right, what stocks are above the line in the sand? And if any of you have been taking my day trading classes over the last, 4 years, you know the line in the sand is the previous session's cash close, right? What was the cash close for the previous session? That's the line in the sand. So once I know where that is, we're well above that today. Now take a look at the structure of the 5-minute chart. It's green. I'm going to be looking for long positions. It might be off a Darvis. It might be off a VWAP. It might be off a volatility zone, my HPMRs, but I'm going to be looking long. And if any of you have been following Charts and Coffee for any length of time, look, I know a lot of folks, especially at the end of last year, the beginning of this year, everyone was about, oh my gosh, we're going to crash and inverted yield curve, all that, frankly, nonsense, because look at where we are. Trade what we see, not what we think, and realize an analysis like that does not necessarily help us with that movement that we're going to ultimately see. Trade what we see, not what we think. So that's really where, gang, that's where the rebalancing is going to land. All right. That's where that's where the rebalancing is going to land. Okay. All right. So next up is, let's see here. And by the way, if those are things that are new concepts to you in terms of what it is that we would do, say, in the morning, by the way, look at the NASDAQ, nowhere near the same structure, right? So if those are things that are sort of new concepts to you, I don't have a link for you all just yet. Then I should in about 6 or 7 days. So set aside $7. We have a trial, and I almost never do trials to my mastery. Right? We have a trial coming up at the end of this month. So if you're thinking, Rob, some of this stuff's kind of cool, I'd like to learn more about that. I got a trial coming up at the end of the month. Set aside a 5 and 2 ones on your desk. I'll let you know when that goes live. All right. So next up, what are my thoughts on the dollar? Let's continue to sell the rips on the dollar life round here, and conversely, buy the dips in the euro. Okay. Yeah, that's really simple. You've got a hawkish central bank in the European Central Bank. You've got a bank that's on the pause end of a tightening cycle. In other words, they're just about done hiking rates. And that's going to cause weakness in the dollar, strength in the euro with that contrast. All right, Natty Gas. John, what do I want to do with Natty? What's my opinion on the futures? Normally it trends. Yeah, John, great observation. It has not in any way been in sync with and let me see if I can bring this up here real quick. It has not been in any way in sync with the seasonals. No, absolutely not. And it's too bad because it's one of those. Here, let me go to the seasonals here. Let's see. Bear with me. Okay, natural gas. There we go. If you take a look at if I can bring this up, but if you take a look at the way in which Natural gas has completely ignored the way in which the seasonals would typically be behaving, right? It just completely ignored it. It should have been in an uptrend going into summer. It should have been doing a lot of things. But when a symbol does not sync up with its seasonals in the months preceding, don't expect that it's going to suddenly sync up as we get closer and closer to, say, a next seasonal cycle. So, John, trade it for price action and volume, but those seasonals really are not kicking in any meaningful way. Yeah. All right. Do I see anything worth mentioning on the RTY? All right. Russell, sure. So we take a look at the Russell gang. Remember, it's heavily weighted. It's heavily weighted in the, let's take a look here, in the KRE regional banks. And Russell does seem to be gaining as much traction as it's had in a long time. Let's talk about something that happened that was important from Q2 to Q3. What happened is the Russell found some strength as we went from the first half of the year to the second half of the year. So for the first time in a long time, the Russell is finding support at that 200 propulsion, which is a fast exponential moving average in the 8 and the slow in the 200 having crossed and now having a higher probability for being support, right? Okay. Having said that, the thing that's going to continue to either help or hinder the Russell is this thing, KRE. KRE has also been coming off the May lows, which is helping the Russell higher because this is the number one weighted sector. Here's a challenge. The closer KRE gets to 45, gang, that's going to be the test for the Russell, right? So free, that's going to be the test for the Russell. So ultimately, what we want to remember is if the Russell is going to keep moving higher, sure, it could benefit from the rising tide of risk appetite in equities, right? Which, again, I think a lot of traders now are going, oh, I really should be bullish. Welcome to the party. It's been going on in the NASDAQ since April, right? So remember, trade what we see, not what we think. That's where KRE could be a problem for RTY when it gets to 45, and we're right there. So that's something worth keeping an eye on. Thanks for the question. All right, Freddie, I see your list of stocks there. Let's go ahead and tackle that UNH. All right, taking a look at UNH. So the idea with UNH is this. It's the number one weighted stock in healthcare. Healthcare is a dumpster fire. Healthcare did not see any love coming out of Q2 to Q3. Financials did, right? So as long as the number one weighted stock in healthcare continues to go lower and in a downtrend, really tough to say, hey, let's try to pick a bottom. We do have earnings. That's true. And if we're going to see buyers make a stand, what are buyers? Buyers are support. Support is created by what? Demand, right? Buying, support, demand. If we're going to see any of that, it's going to be right around 445. You can see the low that we punched down to on the gap down on June 14. That low was 445.68. You can see Thursday's low was 447.18. We can see pre-market we're up at 464. The idea that I want to be a buyer here, not so keen on that. But what I am curious about is if UNH is finally getting some legs, can I find a relative outperformer in healthcare and see if I can get long? I'll tell you this. I'm glad that UNH is finally maybe starting to find a floor, but it's a little too soon for me to make any kind of bigger call on healthcare, because I think as far as which sectors have the most predictability, hence follow through, it's still tech, it's still XLF financials. And I know there's this appeal to say, hey, well, maybe we're finding a bottom here. Gang, healthcare is a tricky one because I don't want to guess at where that demand is going to kick in, where those buyers are going to step up and create some support. I'd rather be trending things that already have an obvious appeal, hence a trend. So I think healthcare is a little soon. I think healthcare is a little bit soon, but probably worth keeping an eye on. Now, when you get to Amazon, Google, and Netflix, Freddie, just kind of treating those as a group. Remember, today is that day, the rebalancing information, who's going to be increasing, who's going to be decreasing, what's ultimately the composition of the NASDAQ. So that's where I say, let's day trade today with the NAS, stay really nimble and short term, and come Monday, we can start to look for longer term swings and such. So great stuff, gang. Great questions. Thank you as always for being a part of our Caffeinate and Dominate show. Remember, gang, we've got that trial coming up at the end of this month. So if you've been thinking, yeah, Rog, I'd really like to join Sector Secrets Mastery, we have a trial maybe once a year, if that. So it's going to be during the summer months. And we're going to have it, I guess, through August. So I'm super excited for that. A lot of great things in store for you during that trial. I will see you all on Sunday for our 6 p.m. show. In the meanwhile, gang, be good to each other, and I will talk with you soon.